this is quite a turnaround that we've been seeing from the first and second half. I'm sure you're very vindicated by all these right now. What's going to be the focus of the transformation plan this year for you? What areas are you focusing on the most?
Sure. Well, look, thanks very much for having me. The headline numbers for 2017, notwithstanding the pickup in the second half of the year, sobering numbers.
Yeah.
And that's why we launched the transformation program. And there are three big pillars to that transformation program. The first is finding new sources of revenue. And of course, the second is adding value to the customer, giving the customer much more value. And the third is that we must be productive, much more productive and efficient than we've been in the past.
Yeah.
So on the first, adding new sources of revenue, we took 22 new aircraft in the last 2 years, and that's allowed us to go to a lot more destinations, 3 new destinations last year, 7 this year. That's ambitious for us, but that helps a lot. We're joining points to Hong Kong that have never been joined before. That gives us new sources of revenue, strengthens the Hong Kong hub.
Rupert, what do you say to people that, when they're like, this earnings report, this was really what we saw was a recovery in cargo, and that passenger yields are still in a bit of pain here? I mean, you've talked about how yields, albeit declining, are showing signs of encouragement right now, but is it safe to still say that the worst is behind us for Cathay?
Well, I think cargo has been a very strong story. We've been a big investor in cargo for a long time. We've got a great fleet. This is the biggest cargo hub in the world. And with the world economy being in quite good shape, we can see demand growing, and that hasn't changed. That's been a big factor. On the passenger side, though, I think there are some really positive signs. If you look at the yield in the second half of last year, or 2017, it was stronger than the yield in the first half. And that's a trend that reversed from 2016. So if you take a 2-year journey, we can see yields improving. So why is that? Well, there's been much more demand in the premium cabins.
What's driving that? Is it sustainable? What are you seeing?
I think it is sustainable. I think we have a great offering in those cabins, but also, the world economy has been quite strong, and that always generates demand for travel, be it tourism or business travel.
Talking a bit about your cargo business as well, I mean, this really was kind of what came to your rescue, I guess, for the second half also. I mean, but this is a really highly cyclical business. In fact, we've seen signs that things are slowly moderating now on that front. Are you concerned about a potential trade war here that could actually weigh on some of that growth that you've been seeing?
Well, I think the first thing I'd say about cargo is that some underlying trends that are quite positive. The growth in e-commerce, internet shopping is definitely building a sort of base load for all cargo carriers, actually, and small parcels. And I don't see that trend going away. Yes, and a calm economic and a calm political situation is the best thing for our type of business. But we've got a very balanced network. We move a lot of cargo from North to Southeast Asia and a lot to Europe. So it wouldn't be good, but I think we would we'd get by.
Yeah, because the areas, I guess, that Cathay specializes, it is electronic parts, it is mobile phones, it's computers, and those are look to be in the next list of tariffs that President Trump wants to slap on China as well. So how are you actually going to mitigate this? Are there other areas that you can look for to gather more business in the cargo side?
Sure. So actually the range of what's moving by air now is increasing. We've put a lot of focus on pharmaceuticals and products that need real care when they're being moved. So I think that's the first thing. Actually, we see a big increase in food of known provenance and things like that. As incomes, people become more affluent, there's definitely a demand. So we see inbound cargo growing more. So there are other factors, but there's no doubt, no trade war is better than a trade war from our perspective.
Rupert, it's Betty here in New York. I'm curious about, your premium passengers, your business class, your business travelers. How are you going to, in your transformation, continue to grow that section of your business?
Yeah, sure. So I talked about, finding new sources of revenue and doing things that the customer values. Well, in terms of new sources of revenue, we talked about new destinations. We took 22 new aircraft over the last 2 years. We're going to take 79 new aircraft over the next 4 years. So that's a very young, long-haul fleet, lots of frequencies to all the key destinations. We're investing heavily in our lounges. We've just opened another one, or we're about to open another one at Hong Kong, our major hub.
Right.
We're going to do a lot more in terms of food. Food's going to be a big concentration for us. And finally, of course, we're going to introduce Wi-Fi across all of our long-haul fleet. at quite a rapid rate, but we've got a big long-haul fleet, so it'll take us a couple of years to do that. So we're looking at the things that the customers really value, and that's what we're focusing on, and that's what we're investing on. Again, this is a very big hub, a big nexus and a gateway for the Greater Bay Area. There's a lot of traffic, and we aim to attract that traffic to us.
Well, you know, when you're traveling business or first class, food is certainly very important, Rupert, a very important part of
and Wi-Fi, yeah.
And Wi-Fi as well for the business traveler. In terms of existing partnerships with other airlines or forging new partnerships, what's your thinking about that over the next 6 to 12 months? Are you looking for new partnerships? Are you looking to deepen existing partnerships with other airlines?
Well, we have a few partnerships. I mean, the growth in our home market and the markets that we serve is quite strong. So our organic growth plan is to grow about 3 or 4% a year off a big base. And so I think largely our plans are around that. We're a founding member of the One World Alliance, and proudly so as well. And that's very useful and gives a lot of value to our customers. But I don't have any drastic plans for new partnerships in the immediate future.
And how about ticket sales? How about, especially for your long-haul flights, you want to serve the premium passenger, but you've also got your base passengers as well. Are you looking to cut fares? Are you looking to undercut the competition as well to bring up those passenger numbers?
Sure. Well, I mean, the fares are set by the market, and this is a very competitive market. There are 100 different airlines that fly into Hong Kong, and we have to compete, in all segments. And if you look at our load factor, which is really a measure of how many people we're able to carry, that's been flat over the last 2 years. So by and large, I think we're successful in filling those planes, and we do have to be, cost competitive. Of course, the markets are growing. One of the challenges that led to our transformation program is that there's a lot more competition now. So capacity has been growing faster than that demand, even though that demand is growing. And that's why we're so focused on making sure that we are really driving things that the customer values and is prepared to pay for, finding new sources of revenue and expanding our route network and joining all these new destinations to Hong Kong, which must be one of the best connected cities in the world. And of course, we can't insulate ourselves from the reality of the commercial cut and thrust. So we must be more productive and find a way of getting more efficient year on year. And if we do those three things, I'm really confident about the future of Cathay Pacific.